morning, everybody. We're live on Facebook, LinkedIn, YouTube, X, and Instagram. That's all good. Thank you, Ion, for the music. See if I can see your comments. Yes, I can. Am I centered more or less? I think we're good to go. Let me just get my notes out here. Good morning, everybody. Thank you. Thank you for joining me. Sound is good on Facebook. Thanks for that, Ashley. I think we're all systems go. January 28th, 2025. I can't believe January is almost over. What a month. Episode 326. Welcome to Mornings with Scott, the best damn business show for medium and small businesses on the planet. Are we having a little bounce in tech today? Are the markets bouncing? The Nasdaq was up a little bit as I was signing on. But here's the real question. Is it a dead cat bounce? If you're a trader, you know what it means. If you're not a trader, you can just visualize a dead cat bounce. It's not really a bouncy ball. It's just a temporary little blip before the whole thing just continues to crash. We will see. I don't have an answer for that, by the way. If you've tuned in for an answer to whether this is dead cat bounce, you've come to the wrong place. I don't know the answer. Nobody can predict that. Anyone who's telling you they know the answer, they're not being honest with you. Yesterday we discussed the concept in persuasion. I just don't feel like I'm centered here. Is that better? I don't know. Yesterday in persuasion, we talked about the idea of exiting the frame, right? If you're in a losing frame, in a no-win situation, you need to exit the frame. And we talked about that in the context of Canada freaking out about U.S. tariffs and how we could exit that frame and make some good decisions and turn this into a win. And the conservatives, I reviewed. I had a plan for that, and then the conservatives did a plan for that as outlined by Polyev on the CTV station. We covered television station. We covered that yesterday. They did exactly that. They outlined a plan to make Canada stronger, Canada more efficient, to diversify our risk away from solely America, not away from America. I got accused in some DMs to me and emails to me yesterday of like, aren't the Americans going to freak out if we're closer to China or closer to Russia? Of course they are. Of course they are. It's not to abandon our friends. It's not to abandon our neighbors. That's not what we do as Canadians. But if the U.S. doesn't want to be a partner and a friend, well, what are we going to do? We need to grow up. That was the idea. I call it the she's just not that into you plan. That's what that plan is, and I think there's tremendous opportunity for Canadians if we have some leadership on that. Well, not to be outdone, the Liberals also came out with their plan, or at least it was leaked to the Globe and Mail, and they did the opposite. They didn't exit that frame. They doubled down on the frame of panic. Globe and Mail reports that Ottawa is planning pandemic-level spending and relief for workers, for businesses, if Trump imposes tariffs. Can we get free money from the government again? That would be terrific. The source said the aid package could be ready to roll out once Parliament resumes, but it would require cooperation from the opposition parties. And by the opposition parties, that means the NDP. Let's think about that for a minute. Will the NDP be interested in giving free money to workers? The NDP is the Socialist Party of Canada, by the way, for our U.S. viewers. Obviously, they're going to support that. That's all the support the Liberals need. And so it needs the support of the opposition parties, and that they would have to delay their declared intentions of bringing down the minority Liberal government until the relief legislation is adopted. And so Jagmeet Singh, the head of the Socialist Party of Canada, the New Democratic Party, NDP, has promised to bring down the Liberal government, although he did it in Weasley words, so I don't know that that's technically true. And here the Liberals are buying him off and all Canadians off. I don't know. Why didn't I predict this? I should have predicted this on the show for you. It's so obvious in hindsight. The Liberals are going to use a crisis to give away that could be real, could be manufactured, but it doesn't matter. They're going to use a crisis to give away cash to save their own hides, to buy off the NDP, to buy off Canadian voters. And it's all on the back of middle and lower income Canadians, because those are the people that are most hurt by inflation, by a bad economy. Surely we learned that over and over again, but the Liberals don't care. Liberals don't care. They're just going to double down on that frame of panic. We're going right back to the pandemic. Awesome. General Motors announced their results yesterday. Sales are up 9.1%. 2 quarters in a row of strong earnings per share. Their guidance is for further ups, that things are going well and they're going to increase and they're going to get better. I'm calling it. I think we've talked about this on the show before. There's tremendous chaos in the auto sector, of which I own a company that is a parts manufacturer in that company. In that sector, the Sinclair Range portfolio includes investments in that sector. And I'm calling it. I think it's hit a bottom. I think there's tremendous chaos. There's shakeout to go. But I think we've hit a bottom, subject to the macro issue of U.S. tariffs and how that impacts the industry. But I think in general, things are shaking itself out in that industry, which is a good thing. Wall Street Journal reported, I noticed, I was just quickly putting together my notes this morning, that Fiera Capital, which by the way is a Canadian-based out of Montreal, I believe, fund manager. They're an interesting group. I don't know a ton about them. I do know some of the people on the private debt side because they make loans to medium and smaller businesses, maybe even some larger stuff at this point. They manage maybe, I'm going to make up a number. I feel like it's over 15 billion of assets under management, like a decent size. I could be wrong about that. You can correct me in the notes if you would like to do that. I'll research it afterwards. I used to know this number, but I may have been forgetting. Anyways, Fiera Capital, according to the Wall Street Journal, acquired timberland property in Oregon. Fiera Capital said it has acquired 6,650 acres of private timberlands in the U.S. as it looks to tap directly to its end market. The Canadian independent asset management firm said that through its affiliate, Fiera, who cares? It acquired the estate in coastal Oregon, a key softwood producing region of mostly Douglas fir. The CEO of Fiera said the acquisition provides geographical diversification, a direct response to the U.S. end product market. We discussed softwood yesterday as a pressure point for the U.S. because they're very reliant on Canadian softwood lumber, not exclusively reliant, but very reliant. Almost all of their imports of softwood, which I recall is about a third of their consumption. Did I say software? Of softwood comes from Canada. And there's going to be growing demand, because there's a lot of rebuilding to do. A lot of natural disasters, wiped out homes, wiped out structures. They want to rebuild. That's part of the new plan of the Trump administration. And for that, you need softwood lumber. And for that, you need Canadian imports. How is that going? So it's a pressure point that we talked about yesterday in the Canadian negotiation strategy that we could possibly use. Certainly not with the Liberals, who have promised just pandemic level spending again, but under the Conservatives, if they should win and lead us into the promised land. And so Fiera is buying softwood lumber in Oregon, which I think is smart, very smart, an interesting deal. I want to keep an eye on that one. Yesterday, Canadian cannabis stocks just got crushed yesterday. Organogram down to $1.53, down 3.16%. Tilray down $1.10 to which was 3.51% decline. Aurora was down to $3.72. This is all in Canadian dollars, by the way, guys. Almost 4% decline. Canopy down to 2.09, so $2.09, down almost 6% on the day. I'm not sure why there was a one-day routing, but there was. I do believe it's just tied to markets in general, which we are going to get to. On the other hand, there was a video clip on Bloomberg from Federico Gomez, Director of Research in Life Sciences at ATB Capital Markets, where he shared his hot picks in cannabis. And they were Organogram, because they're the largest player in Canada. and they have no debt, notwithstanding their stock got crushed yesterday as well. Sundial, because it's retail, and they seem to be winning the retail consolidation wars, and they have U.S. exposure into retail. All of his picks seem to suck in terms of performance yesterday, but I think what he's focused on, and a theme that I want to talk about today, is having a good business, and that is different from markets. What is the number one question that I get in my entire practice right now? Is I get called almost all the time and says, "Hey man, Scott, is there money for cannabis companies? Can we get financing?" And the answer is yes, there is money if you have a real business that involves cannabis. There is capital available for that. It's a business. What is a real business? A business that makes money or has a prospect of making money, that is credible, that has a strong management team, that adds value to the sector. There is not money for what is traditional in Canadian cannabis, well, in all cannabis, global cannabis, I would say, but certainly mostly in Canadian cannabis. There's not money for the dream of cannabis, for the societal, one of the words I want to say with this, the societal good, the life, the health benefits, the alternative remedies. There's no money for any of that. Any of it. That bubble burst long ago, and it has not returned. I don't know if I described that well, but the focus is if there is a real business and it happens to have cannabis in it, if it's a good business, and if you can break through the noise of all the other dreamers. And by the way, I'm not saying the dreaming thing is bad. That's all awesome. I'm just saying there's no money for it in the market right now. Well, if you can break through all that noise, there is money available. The Globe and Mail reports with respect to Cannara Biotech, Cannara Biotech. This company continues to focus on execution, operations, supply chain building. Those are good things for a real business to accommodate increases in sales and market share in Canada. And shares are moving against the crowd this Monday after it achieved its highest market share and revenue in fiscal quarter 2025. It's a vertically integrated producer of premium grade cannabis and derivative products, offering them at affordable prices. Has two mega facilities in Quebec with over 1.65 million square feet. By the way, if you have 1.65 million square feet in two facilities, that's roughly 800,000 square foot per greenhouse. And I don't know if you have had the opportunity, I have stood and worked on the financing of an 800,000 square foot facility of a Canadian LP back in the day. What's that, 5 years ago? Something like that. 800,000 square feet is a big structure. Like, you can stand there and basically not see the end of it. It's just plants everywhere. It's really an overwhelming amount of space if you're just trying to grow cannabis in that thing. Hey, Catherine, thank you for joining us on Instagram. And so, sorry, just let me check my Instagram notes here. Yeah, there we go. And so they announced in a press release today their first quarter 2025 financial and operating results for the 3 months period ended November 30th, 2024. Revenues up 33% to $34.9 million in Q1 2025. Due to deeper market penetration, new market entities, additional new genetics. Everybody's a new genetic. Everybody needs new genetics in the cannabis business. And products, total revenues. This new genetics and products. I've owned or operated an extraction facility a couple different times in the last several years. And your management team comes to you and say, okay, today this is hot. This is a hot product. We need to deliver this, or we need to deliver this new sort of strain. And for that, we just need a small amount, maybe 50 grand, 100 grand of new capital expenditure. And then you think, okay, well, let's get our mind around that. Let's source this product. And then next week they come, no, the whole market's changed. Now we want this product and this genetic. That's the hot trend. That's what all these distributors want. And for that, we don't need to buy that piece. We need to buy this piece. And it is an endless cycle. It's very difficult to get on top of in that industry. Total revenues net of excise taxes rose by 29% to 25.1 million. There's gross profit. And the bottom line is these guys are profitable and are focusing on a core business. There is money available for real businesses that provide value and treat it like a business. They don't treat it like a dream. They don't treat it like a high growth. They're not saying, hey, our business doesn't work. But once the U.S. Puts in fair banking practices and legalizes and reschedules and whatever, then this whole thing's going to take off, and we're well positioned for that. That business plan is not selling. But if you're focusing on a real business right now, you can get capital. The capital is available primarily from private lenders, from U.S. private lenders, and also to a limited extent from strategics. SRI, Sinclair Range, my company, is helping cannabis companies all of the time. We can help you finance, merge, sell, buy, restructure, manage. Feel free. Reach out. Give me a call. Send me a DM. Send me an email, whatever you want to do. And maybe we can help you out with your cannabis plans. You know, every night while preparing for this show, I lay in bed, I lay on the couch, I have my phone in my hand, and I'm searching stories. I search the Wall Street Journal, the Globe and Mail in Canada, Bloomberg. I've 5, 6 different my X feed that I've listed for a good story, and I search through. And what I do is I cut and paste the paragraphs, and I put them on my iPhone into the notes function. And then in the morning, I extract that and I put it into a Word document, and I see what's going on in the morning with the markets. And I just kind of spend an hour figuring out how the flow of this show is going to go. And that's what I do it. So last night I'm laying there, I think it was on the couch by the fire of my iPhone, and I'm on the Wall Street Journal. And the first 6 articles online were about DeepSeek and the crash in the tech market yesterday. 6 articles in a row. There were no other stories. It was just that. For 2 years, Wall Street Journal, for 2 years, market believes that the rise of the AI would usher in a new era of productivity and growth that has fueled trillions of dollars in the stock market. Nvidia, the maker of the computer chips at the heart of the AI boom, has been in the vanguard of this advance. Wall Street has perceived the company to have an almost unbreachable defense against competition with its offerings and high-tech chips. The company's rapid growth and windfall profit have helped push the other technology firms and the Nasdaq to record after record, with giddy investors expecting the same down the road. Do you think giddy investors are a sign of a bubble? Maybe, huh? On Monday, the mood turned sour. DeepSeek, a dark horsepower, not AI intelligence, emerged from China. That rattle, we talked about DeepSeek yesterday. If you recall, that story was in trading terms about 2 hours old when we discussed it yesterday. It rattled big tech stocks and led to a plunge of almost $600 billion in the value of Nvidia, which only last week was the world's most valuable company. Nvidia's fall marked the largest one-day loss in the market value for any public company ever. Now, you may ask yourself, Scott, why just $600 billion? Well, according to data from Vanda Research, retail purchases of Nvidia shares totaled a net $562 million yesterday, the largest amount on records going back to 2014. So the retail, as the stock is falling. Why is the stock falling? Because somebody's selling. Who's selling? Institutions, the smart people, the hedge fund people, the private equity people, the Fiera Capitals of the world. I'm not suggesting I know anything about Fiera's portfolio. I'm just saying the asset managers are bailing out based on this DeepSeek news. And you know who their liquidity is? Do you know who they're selling to? They're selling to you. They're selling to you, the retail investor. Retail investors have been continuously buying Nvidia shares over the past few years. In the last quarter, they purchased around $7.3 billion worth of shares, according to the New York-based market research and analysis firm. However, this is almost half the peak in quarterly purchase recorded in September 2024. So, institutions versus retail. What's a retail investor? You day traders, you're buying stuff in your mutual funds, you're buying stuff in your IRA, not your mutual funds because that goes through an institution, but in your RSP, in your IRA, you're going off, you go, I want to buy some NVIDIA, I want to buy some options of NVIDIA. You are the retail investor, and you do have power. You do have power. If enough of you come together, you can buy $562.2 million worth of NVIDIA stock in one day, but you are the liquidity for the smart people, right? The institutions are selling and you're the one that is buying from them. So is that going to be a good trade or a bad trade? What are the signs that something is in a bubble? Well, a little bit of bad news, right? Some technological interference causes everybody to bail in a panic, and you lose $600 billion of value in one single company in one single trading day. Also, that might be a sign. And also, you have outsized retail demand. You know, the Canadian cannabis bubble from however many years ago, now it feels like decades ago, but it was like 5-7 years ago, maybe. I have to think back that far. But there was like all of the billions and billions and billions of dollars of wealth and value that was created and money that was raised in this cannabis world in Canada. The beginning of the industry really globally was basically 3 institutions and then the retail market. And the retail market was creating the exit for the institutional investors. They got in quick and they flipped it back out to the retail because retail investors, people with just individual stock accounts, were the ones that created that bubble. A couple of signs of a bubble: extreme volatility on any bad news and an outsized abnormal retail investment. So back to that Wall Street Journal article. Last week, DeepSeek released an AI model that appeared to perform on par with the cutting-edge counterpart from OpenAI, the U.S. firm at the heart of the AI craze. So it's better, or at least the same as ChatGPT is the bottom line. The twist: creative engineering tricks meant DeepSeek needed far less computing power. The upshot is that the AI models of the future might not require the high-end Nvidia chips. Just to remind you from yesterday, DeepSeek claims, that's a key part of this, that they only spent $5 million developing this model. They used like 3rd generation old chips from Nvidia, and not very many of them at that. And that they did it in 3 months, compared to the hundreds of millions or billions of dollars from the American companies and the high-end chips that have been pushing up the value of NVIDIA. This is, quote, "This is kind of classic in our industry," end quote. Salesforce Chief Executive Mark Benioff said, "The pioneers are not the ones that end up being the victors. The people leading the revolution are always the ones that get killed." The development turned Wall Street upside down. NVIDIA stock dropped 17%. Chip stock, Broadcom and Microtechnology fell more than 10%. The S&P 500's technology sector lost 5.6%, its worst one-day decline in more than 4 years. In all, Monday's bloodbath wiped out some $1 trillion from the stock market's value, according to the Dow Jones. Leon Cooperman, the billionaire stock picker who founded Omega Family Office, is one of the many investors who says the euphoria surrounding the sector reached unsustainable heights, i.e., it's in a bubble. Every third word out of anyone's mouth was AI, Cooperman said. Everybody was bulled up in the market. If you have a contrarian bone in your body, you have to start looking the other way. The threat to NVIDIA is the largest it has faced since sales of chips skyrocketed during the AI boom. They booked $63 billion in earnings in the last 4 quarters. As for NVIDIA, they said, hey, this DeepSeek thing is actually good for us. We're going to sell more chips. I don't know what else they could possibly say. That doesn't seem right to me. Okay, that's as you know, as usual with the Wall Street Journal, their articles just go on and on and on. But you know, it wasn't the chip makers only and the tech guys that got crushed yesterday. Energy as well. Yahoo Finance AI exposed power stocks were swept away with the tech sell-off Monday as advances in AI made by Chinese startup DeepSeek raised questions. Constellation Energy, we've talked about them on this show quite a bit. We've bought and made money. When I tell you about the portfolio that I've been running on options, I do not give you financial advice. Don't listen to me on any of that. Your personal securities trading, that is not me. Business advice is my thing, but I do disclose with you my thinking and why I do things. Constellation Energy, the largest nuclear plant operator in the U.S., doubled 21% just yesterday. Electricity generator Vistra Corp sank by a record 28%. just yesterday. Power equipment maker and servicer GE Vernova declined 21%. Even nuclear power startup Oklo tanked 25% just yesterday. DeepSeek released a new AI model. Yeah, we already know that. Big tech's insatiable energy requirement for data centers sent power stocks soaring in 24 and into this year. That's why we bought some of these on short-term options and made some pretty good money. And Goldman Sachs estimated power demand will grow 160% by 2030. Is that still true? Last year, Constellation announced a nuclear power deal with Microsoft to revive 3 Mile Island in Pennsylvania. In December, the social media giant Meta released a request for proposals for nuclear energy developers to help meet Meta's AI needs. Wall Street analysts pushed back against the market reaction on Monday. Quote, I don't think DeepSeek is doomsday for AI infrastructure, said a managing director and senior analyst at somebody, they don't tell us who. The models that DeepSeek built are fantastic. They really are. And they've pulled a number of levers on efficiency, but what they're doing is not miraculous either or unknown to other top AI researchers or AI labs that are out there. So how does this conclude? Their outlooks will look likely. It's estimated more than 40% of the okay. So the chip people were crushed. The Nasdaq was down quite a bit as a result, and the energy sector was crushed. So the big question is DeepSeek, is this real? Has DeepSeek just wiped out this industry and everything that drove the bubble, or is this fake news? Is it because, China, remember, the proposition here is they built this model in 3 months for $5 million, not hundreds of millions and billions, and they used old chips and they used fewer of those chips, which means that everything the American companies and the leading tech companies have been doing is out of date. It's cumbersome. It's too expensive. We don't need these $500 billion of data centers that were announced by Trump and Oracle and SoftBank and Sam Altman. What was that? That was just last week. You don't need those data centers, and you don't need the energy to fuel those data centers, which has been the entire hypothesis of all these stocks. So is that true? Is that true, or is that fake news? Well, I think the answer is going to be both. That's my expectation. Yesterday, I asked that question. We didn't know the answer. There's a lot of doubt about the news from DeepSeek because, Chinese, but it also is open source and it appears to be real. I noted that Perplexity, which is an AI owned by Amazon, is now providing access to DeepSeek and promising to protect your data so that you're not going directly and putting an app on your phone to the Chinese and giving them all of your information, which is what they want since your TikTok is going to be banned, or at least it's going to be sold to somebody else who won't let the Chinese get your data. That's the general idea there. So we will see the real answer to this, but my expectation is both. My prediction, in fact, is that this has just been grossly over-exaggerated by the DeepSeek side of things, yet it's still an evolution of the industry, and it's going to change things. And because it's going to change, because there's chaos, there may have been a bubble. It appears to me there is a bubble, evidenced by the retail investment, evidenced by the volatility. And a bubble, nobody's making money in the AI business. If we come back to this theme of having a real business, like we talked about on the cannabis side. So the bubble may be bursting, or this may be all noise, but either way, there's going to be a ton of volatility back and forth on the stocks related to this sector. Elbows up, everybody, if you're trading in this. But for us users of artificial intelligence, I use every single day to research. I don't Google anything anymore. I research and I write using AI. AI writing is terrible, by the way, but it really shortcuts human writing. You can get a base of something and then you can edit it into something that is more authentic in your voice and punchy. So I use that all the time. I am out of time. Speaking of time, this has been Mornings with Scott. We'll see you tomorrow, as I try to do almost every day, 8:30 a.m. Mountains. Thank you for everybody for listening. Hey, Carol, thanks for joining on Instagram. No comments I need to respond to. Ciao. We'll see you tomorrow.